Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And the Q2 earnings season just continued, and yesterday my portfolio position MI Homes reported their Q2 earnings. And I want to go through these numbers of MI Homes. And if you follow me for a while, then you know that MI Homes is part of my portfolio with 5.52% of the whole portfolio. And if you're new to my channel, then you see here the whole pie of my portfolio. Find deeper analysis to all of these companies on my channel. Check this out. And MI Homes is one of the bigger US home builder. Maybe you know, maybe you're not, but I think you should. But before we come to the Q2 earnings, don't forget to subscribe, ring the notification bell, and join me on my road as a long-term value investor. So MI Homes yesterday reports the 2021 second quarter results and a 100 million share repurchase authorization. 2021 second quarter highlights was that the revenue increased 35% to 961 million, an all-time quarterly record. The net income of 107.6 million or 3.58 per diluted share is a 97% increase compared to the 54.5 million in 2020. The shareholders' equity reached an all-time record of 1.5 billion, a 34% increase from a year ago, with book value per share of $50. And the return on equity improved to 27%. For the 6th month ended June 30th, 2021, net income increased 123% to 192.5 million or 6.43 per diluted share, compared to 86.3 million or 2.98 per diluted share for the same period of 2020. The company also announced that its board of directors has approved a 100 million share repurchase authorization, replacing its existing 50 million share repurchase authorization, which is also, of course, good for shareholders. The CEO of MI Homes, Robert H. Schottenstein, said, "We had a record-setting second quarter highlighted by a 97% increase in net income, a 23% increase in homes delivered, a 35% increase in revenue, and a return on equity of 27%. Our gross margins were very strong, improving 320 basis points over last year to 25.1%, and our overhead expense ratio improved by 110 basis points to 10.4%. As a result, our pre-tax income percentage improved to 14.7% from 10% in last year's second quarter. We set all-time quarterly records in backlog units and sales value, with sales value rising to 2.5 billion, a 71% increase from a year ago. Demand for new homes continues to be very strong." So that's what the CEO had to say. And overall impressive, great numbers, which beat their estimates by a mile. And with that, yesterday MI Homes made a big jump of 5% to currently $60.89. And also over the last year, they have a performance of 45%. And then they peaked in May after the Q1 earnings came out, and then just declined back to under $60, and now after these very, very impressive Q2 earnings just jumped up over $60 again. When we put all these numbers to a valuation table, and you know, when you follow me for a while, I use this Excel sheet by Sven Carlin. I put the link to the free download down in the description below. If you remember, for the first 6 months, MI Homes reported earnings per share of $6.43. I go very defensively here with an estimation of $10 for the whole year. I guess it will be more, but okay, let's say $10. Then, of course, I put in here my discount rate, my expected return of 12%, and a terminal multiplier with 12, which is still very, very low. But remember, right now the P ratio is 6. So let's say in 10 years the terminal multiplier is 12, and even no growth, which is very, very negative thinking, but in the home building, of course, we have a run, we have maybe a bubble. At some time it will burst. And so let's say we have no growth over the next 10 years, and in 2030 MI homes still earn only $10 per share per year, then you come to an intrinsic value of $95, which is still way below, 50% below the current stock price, even a little bit more. Then when you try to make a second scenario with a best case scenario, and let's say they don't earn $10 for 2021 but 12, even this is maybe not too optimistic, and they grow 10% in the first 5 years and 8% in the next 5 years, which is, I think, possible, and come out with a terminal multiplier of 15, which is also not exuberant, then the intrinsic value would be 211. An amazing number. This is more than 3 times the current market capitalization. But even if we put in the worst case scenario, in the third scenario, again $10 for 2021, and it's almost impossible to go under $10 for the year 2021, and then even a decline of the growth of minus 5% for the next 10 years, and a terminal multiplier of only 8, then you come to an intrinsic value of 64, which matches almost the current stock price of 60. It seems like MI Homes could be a big chance, and seems way undervalued under normal circumstances. And so the question for me, because this is really so highly undervalued in this overall so high valued market, the question is, what I'm missing? Let me know in the comment section. Maybe I'm really missing something here. For me, it looks like a bargain. I'm not that confident that I will say, okay, I put all my money into MI Homes, but it really look great, with a lot of upside and little downside, just as I like it. And one of the things, or one of the reasons why maybe the stock price don't follow these great numbers yet, is that it's maybe overlooked. Because when you look for analyst ratings, I don't care a lot about analyst ratings, but I just looked here how many analysts just follow MI Homes, and what I found is I only found 2 analyst ratings, not just on MarketBeat. I just looked around a little bit, and I don't found a lot of analyst ratings, and so it seems like MI Homes is maybe overlooked by Wall Street. This could be one of the reasons why the stock price don't follow these incredible numbers and these calculated intrinsic value. But as I said, let me know in the comment section what you think, if I maybe overlook something, and then just let's discuss maybe also the risks. I mean, of course, there are risks in the home building sector. As I said, there's a bubble, of course, with the very low interest rates. At some point, they will rise again, and then, of course, home builders will have problems. So this is a risk, but I think this risk is not that high that you should have undervaluation like this. And so I'm very happy with the 110 shares I have of MI Homes, and here on the chart, on this green dots, you see when I bought my shares. I bought at different times, a little bit here, a little bit there, and my whole position have a purchase price an average of $63.84, with a performance of minus 4.62% right now. I don't care so much about that, because as I tried to explain before, I think this is a great company for a great price. And so I will buy more, around $60 or even under $60. I will just add from time to time more and more. So I think I will stick with this company for a long time. And what also makes me very confident about this investment is just the management, the CEO, Robert H. Schottenstein, is just a great businessman. Just Google him up, look what he did in the past. I think this is very trustful, and so overall I'm very confident in this investment, and we will see how this will work out over the long term. So that's it for today. As I said, let me know in the comment section what you think about MI Homes. If you liked the video, please give me a big thumbs up. This helps my little channel a lot. And subscribe to my channel and follow me, and then you will get 1 or 2 stock analyses every week, and every weekend the full insight to my real money portfolio with a weekly update. So see you then. Take care. Bye bye.